Dear students, hope you are doing well. In previous video, we have talked about funds. In this video, we are going to talk about flow of funds statement. Flow of funds statement is basically a summary of changes in firm's financial period position between two periods. For example, if we want to know that how firm have obtained firm funds and use them during 2006 and 7, we will prepare a flow of funds statement. It is also called sources and uses of fund statement or a statement of change in financial position. It was replaced by cash flow statement since 1989. Now the question arises is that why should we bother to understand a flow of fund statement that is no longer required by any formal institution? The answer to this question is that it includes important non-cash transactions in comparison to cash flow statement. It is easy to prepare and often preferred by managers for analysis purposes. For example, if creditors want to assess that how firms obtained funds and consequently how the firm has used them, they will require a flow of fund statement. The cash flow statement will not assist them in this analysis. It also helps to better understand the cash flow statement. It can be prepared by following three steps. First, we will have to compare two balance sheets for previous and current year. Then we will determine the balance sheet changes as sources or uses of funds. And finally, we will consolidate this information in proper flow fund statement format. This table will help us to understand how we can determine assets and liabilities as sources or uses. Whenever asset decreases, as evident from this table, A stands for assets and L for liabilities, S for sources and S for uses. Whenever asset decreases, we consider it source. Whenever it increases, we consider it as use. On the other side, when we see a increase in liability, it is considered as source, and when we see a decrease in liability, it is considered as use of asset. We will see the formulation of flow fund statements using this example. This example shows the balance sheet of a company and it compares balance sheet between 2 years. At first, we can see that cash has decreased from 100 to 19 in 2007. We will consider it as source because whenever the asset will decrease, it will be considered as source. Inventories have increased and we will consider it as use. There is no change in prepaid expenses and accumulated tax prepaid has increased and we will consider it as use of funds. The use and sources statement is not applicable to accumulated depreciation as it does not create any cash flow. The long-term investments and other assets are not changed, so they are excluded from this analysis. First, we have determined that if it is source or use. Now we will determine by how much amount the assets has changed. We can see that cash increased by 10. Similarly, inventories increased by 80. Now we will see the liabilities. Notes payable, which is a liability, has decreased and we will consider it as use because the decrease in liabilities will be considered as use. Long-term debt has increased and increase in liabilities will be considered as source. Similarly, retained earnings has increased and it will be considered as source of fund. Once we have seen the direction of changes, now we will just see by how much amount these changes have occurred. In the final step, we will prepare flow fund statement in this format. Remember, sources and uses should always be equal. We have 4 sources and 4 uses, and we can see that total amount of both is 156 tabs. Kindly prepare flow fund statement from the given data. Thank you so much for your attention.